All right, looks like we are live. So this live stream show is starting a lot later than I was planned. My health problems are just giving me immense problems right now, but I'm going to power through and get this done. I am about to cross over 7 million views on my YouTube channel. Shout out to my former business partner John Manfreda, who started another career as a CPA. He's doing very well for himself. I know he still listens to the podcast. I have not unfortunately spoken to my former business partner Mo. I think it's at least 2 years. Anyways, I am making investments and upgrades into the podcast here. I have a new laptop. I just got the data transferred over to the new laptop from my old laptop that I'm still using right now. So hopefully in the next couple days, I will have the software programs, all the ones needed for live streaming and recording and editing short videos and doing all the other things I need to do to produce content for my Wall Street for Main Street YouTube channel. I'll have all that transferred over to the new laptop. I spent a good amount of money on that one. I did not go cheap on that one. So there's a lot of quality features in that laptop, and I didn't buy a MacBook, but maybe I'm not really a big fan of Apple though. Anyways, let's get to the content. So last week, retail sales, the number that Trump was touting, besides the fake jobs number a couple weeks ago where they moved right around 5 million people, according to Shadow Stats, into the employed category when they're unemployed, and they're still touting that number. They were touting that retail sales number last week. Well, that number is really, really, really misleading, because not only do you have a bunch of people earning an extra $600 a week on unemployment, and you have people committing fraud with SBA loans, a bunch of different types of fraud, but also, and this is one of the key components here, you have according to this CNBC article that came out on June 16th, 30% of Americans missed their housing payments in June. So if they have forbearance and they're not paying their mortgage, and they think that maybe they're going to get away with not paying their mortgage for another few months, or maybe they're hoping the Fed will bail them out even more, besides some of them, and there was a pretty good chunk of people who got their 1,200 stimulus checks and used it to pay down debt. I think it was around 40%, according to one of the articles I saw. But besides the people that actually prudently maybe paid down some debt, there was a lot of people that went and spent, either didn't pay the mortgage, didn't pay their bills, or took that $1,200 stimulus check and went, instead of paying their mortgage, and spend it on retail sales. And so that's why I think the retail sales numbers are misleading. Also because I think a lot of businesses, after these SBA loans, the PPP program is not renewed, or we'll see what happens, because I think there's going to be a limbo period. There's going to be more people filing for unemployment in the coming months unless the unemployment benefits are extended. So as the United States, I'll read the article here from Alicia Adamek. I probably screwed up her name. It looks Polish. Adamczzyk. Not sure how to pronounce that. As the United States continues to face record unemployment due to the global pandemic, 30% of Americans missed their housing payments in June, according to a survey by Apartment List, an online rental platform. That's up from 24% who missed their payment just 2 months earlier in April, and about on par with the 31% who missed payments in May. Renters, younger and lower income households, and urban dwellers were the groups most likely to miss their housing payment, Apartment List found. At the same time that this historically high rate of Americans are missing their housing payments, eviction protections put in place at the beginning of the global pandemic spread in the U.S. are beginning to expire. So additionally, the current 30 million unemployed Americans will lose the extra $600 per week in federal unemployment benefits at the end of July. So again, this is why the retail sales numbers that everyone is touting last week as the miraculous recovery in the economy, with the jobs created, the unemployment going down, the retail sales numbers last week. This is why I think this is misleading, because we have these politicians, these central bankers, these bureaucrats, these too powerful, overpaid government bureaucrats, whether it's in Australia or here in the US, trying to change the rules to make sure that the housing bubble, that housing prices do not fall. And this has to do with property taxes, because if housing prices are falling, what's the justification then for people paying higher property taxes, because that's really the game. George Gammon, I've been talking about this for a long time, and then George Gammon's been covering this recently too on his videos. But the whole game, really for the more than 10 years, it's been decades where this has been going on, is get housing prices higher so state and local governments can justify higher property taxes. And if housing prices fall, if real estate prices fall, the game starts to break, because so much of the budget for these state and local governments is dependent on property taxes. And people will revolt if they feel that housing prices are not going to rebound. And this is what we're starting to run into now with this other story, besides the fact that mortgage rates have dropped to another all-time low, is that nearly half of Americans now, because their small and medium-sized business is probably going through either difficulty or bankrupt, or they're debating closing because maybe they got the PPP loans and they kept their employees on for so they don't have to pay back the loans, and now they're worried if they're going to keep their employees, so they're debating either downsizing their house or they're going to sell their house. So nearly half of Americans now are considering selling their home as the global pandemic crushes finances. Here's the problem, though, and demographic people like Harry Dent and Neil Howe of Howe Generation, they've talked about this. My generation and the younger Generation Z, who are in college or just graduated college, they don't have a lot of savings. They don't have a lot of cash. They don't have a lot of savings. A lot of them don't even have a good full-time job. If they do have a good full-time job, the data is showing that the majority of their spending is going towards like student loan debt, food, rent, healthcare, and maybe a little bit of discretionary income spent on dating if they're going to do that. So there's not, for the younger generation, I think only 17% of people in my age demographic, which is like 18 or 21 to about 36 or 37, only about 18% owns their own home. It's very low. So this is turning into a renter generation here in the US, like more in Europe. So who will be the buyers? Will it be the Fed? Will it be private equity? Because that's what happened after the 2008 financial crisis. The Fed gave private equity and hedge funds, and George Gammon has covered this too, an insane amount of interest-free loans to go out there and buy in Nevada and I think near Arizona and other areas, entire rows and tracts of empty houses, and then start to rent them out for cash flow. So wondering if the Fed will try another similar game. In Australia, I don't cover the Australian housing market a lot, but I've listened to George Gammon interview Martin North twice in the last like 6 weeks or so, talking about how now there's like a new like add-on construction tax credit. They're playing all kinds of games to prevent housing prices from falling. But for state and local governments, they are so dependent on those property taxes. They fund almost everything. They fund all the shenanigans that's going on because, like I said on the last couple live stream shows, when I was covering the real estate market, commercial real estate and residential, there is no shared sacrifice. So these governments do not want to cut back on their spending. They should cut back on their spending. They should cut the government budget. They should tell the government employees there should be shared sacrifice, because the real economy is not doing well right now anywhere, basically. It's not generating cash flows. There is no justification for keeping government at these sizes because the real economy cannot afford to fund it. So let's get into this survey here. Nearly half of Americans consider selling home as the global pandemic crushes finances, as the global pandemic has metastasized into an economic downturn, and the economic damage is way worse than the amount of people infected and dead. Way worse. Many, many trillions. I don't know if we'll ever get an accurate number for the amount of economic damage. Tens of millions of Americans have lost their jobs and are struggling to service mortgage payments. New research offers a glimpse into struggling households, discovers out of the 2,000 American homeowners polled, over half, or 52% of the people polled, say that they've routinely worried about making future mortgage payments, and nearly half, or 47%, considered selling their home because of the inability to service mortgage payments. And what I'm noticing here in the DC metro area is I am seeing and my best friend is a successful real estate agent here in this area, tons and tons of people from the Silicon Valley metro area, from big tech, and tons of people from Washington State, the Seattle metro area. So that's where normally Microsoft and Amazon are. They are moving here. I have never seen so many Washington State license plates on BMWs and Mercedes-Benzes here, on fairly new ones, either brand new or fairly new ones here in this area in just the last month or two. Never seen this many before in my life. I'd only seen a Washington State plate in this area prior to the last couple months, maybe a couple times in the 20 or so years I've been here. It's very, very rare. And I've seen them all the time. So a lot of the other metro areas are now moving to the last remaining big bubble here that is divorced from reality, the Washington, D.C. metro area, hoping that the jobs market will stay more secure here. A lot of people are moving to Texas too. So I think a lot of businesses, a lot of people are moving to Texas. There should be pretty good job creation in Texas from a lot of companies moving there, at least for a while, except for the oil industry. I'll probably do an update. I was planning on doing an update earlier, but I was earlier tonight for oil market for my Patreon account contributors, but I'm not feeling that well, so I'm not sure if I'll be able to do it in the next couple hours or not. If not, I'll try to get it done in the next couple days. Okay, back to this survey. The study conducted by OnePoll and the National Association of Realtors determined 81% of respondents had experienced unexpected financial stress due to the virus-induced recession. Also, Danielle DiMartino Booth talked about on the QTR podcast with Christopher Irons how, according to a recent Harvard study, that very high net worth Americans are refusing to leave their home. They want to wear masks, and they do not want to spend. So they're not spending. So the people polled, very high net worth people, are refusing to spend. So the consumer spending has dropped by more than 50% according to the poll. Danielle DiMartino Booth was talking about that in a very interesting, about 2-hour interview with Christopher Irons at QTR. Study conducted, National Association of Realtors determined 81% of respondents had experienced unexpected financial stress due to the virus-induced recession. Over half, or 56%, reduced spending so they could service mortgage payments. So that's the prudent thing to do, is to cut your discretionary spending and focus, pay your bills, pay your mortgage, but not all Americans are doing that. Since mid-March, or about the time when the lockdowns began, nearly half, or 47% of homeowners have explored alternative ways of making money. About 2/3 of respondents making currency. It's a Zero Hedge article. Should say making currency. About 2/3 of respondents, or 64%, started side projects, while 53% sold valuables to supplement income. Quote, the swift and unprecedented impact of the global pandemic left many people in a financial emergency, and we want to make sure struggling homeowners know they have relief options, especially during homeownership month, said National Association of Realtors President Vince Malta. Realtors and lenders can identify programs and aid designed to help meet loan obligations. Acting quickly may help homeowners stay in their homes and keep the money they have already invested into it, Malta said. From clothing, 71%, and takeout, 66%, to streaming TV services, 46%, groceries, 45%. Respondents said their spending habits had been significantly reduced so they could service mortgage payments. And that's the prudent thing people should be doing now, is raising cash, getting savings in case asset prices fall. So there is the opportunity to go and buy quality assets if there is another stock market crash, or if real estate in a certain area goes on sale and maybe there's a good rental property. But not everyone's doing that, like I said. Now, there are prudent people. It's a bifurcation, I would say. In a separate report, because grocery prices are also going up. I mean, that was in April, I think, was the largest spike in 40 or 50 years in grocery store prices. And that was in the Federal Reserve or Bureau, I think it was Bureau of Labor Statistics own BS data. So they couldn't even cover up the food price inflation in their own data. In a separate report, more than 4 million homeowners are in mortgage forbearance plan, representing 7.54% of all mortgages. Delinquencies are set to surpass the 2008 financial crisis, which peaked at 10%. Oxford Economics said 15% of homeowners would fall behind on their monthly mortgage payments in a tidal wave of delinquencies, which is similar to the prediction by Moody's chief economist Mark Zandi, who said that as many as 30% of Americans with home loans, or around 15 million households, may stop paying if the U.S. economy remains closed through the summer or beyond. Google search the Google search phrase, quote, sell home, rose during lockdowns. They have a screenshot here in the Zero Hedge article. You can take a look after this show's over in the I'll put the link in the information and description section. All of this says a lot about the economy. Households are struggling. They can't afford real estate. Consumption will remain low as the prospects of a V-shaped recovery this year continue to wane. And this is the black swan here, is commercial real estate and residential real estate. And what is the Fed and what are the U.S. Treasury and government going to plan on doing? So for those of you who are not familiar, in the last month or so, the Fed released a financial stability report, and there's some really interesting things in there. I'll put a link to it below the video in the information and description section if you want to go through and read the report. For my paying customers, my patrons, my over 1,000 paying customers, there should be hopefully also sometime this week. I was thinking about doing it today before my health problems kicked in again. There will be some more analysis on that behind the paywall too, hopefully this week. There's some interesting tidbits in there related to commercial real estate, corporate bonds, and collateralized loan obligations. Which industry is staring down the barrel? Which industry the Fed is scared the most for? Talked about in their financial stability report. So that will be another update behind the paywall as well. Also, I'll try to get an oil market update out too. So I have a number of different things. Hopefully I will be able to work on sometime this week. But the Fed claims here in their financial stability report, talking about asset price valuations, borrowing by businesses and households, leverage in the financial sector, businesses not being able to get funding, and near-term risk to the financial system. They talk about how mortgage borrowing poses less risk to the financial system than in the 2000s. Well, that's because that's because they manipulated interest rates so low. So U.S. mortgage rates have dropped to, this is from Doug Whiteman. I put the screenshot there from his MoneyWise article from a couple days ago, June 20th. U.S. mortgage rates have dropped to another all-time low. The problem is you still need cash flow for real estate. You need cash flow to pay your mortgage. So they can manipulate interest rates down all they want, but unless the real economy is generating cash flow, people are not going to be able to pay a good amount of people are not going to be able to pay their normal mortgage payments. So we have a big problem here, where younger adults, my age or younger, the ones who just graduated college, and those ones are having a real problem now adapting to the job market. The job market's a disaster. If there is full-time jobs, there's not nearly as many now because a lot of businesses are cutting back and worried about making investments for growth. So there are not a lot of buyers in my age demographic or younger, not yet anyway. Now, if home prices collapsed, maybe, but then would the people in power even allow that? Or would they only allow it for a very short amount of time? And this is why, if that does happen, this is why you need cash to take advantage of opportunities. And I think this is also why Quicken Loans, the largest U.S. mortgage lender, I think they own Rocket Mortgage. This is why they're planning on going IPO. Because they see the writing on the wall, and they know that maybe it's not a month or two from now, maybe it's not even 6 months from now, maybe it's at most 12 to 18 months from now, that the housing market, the residential real estate market, is going to have big problems. So this is why the investors, the angel investors, the private equity guys, the ones who have been investing while it was not a publicly traded company in the different rounds of Series A, Series B, this is why they want to cash out. Almost 300 people are watching the live stream show. Just give a quick update. I think that's it for most of my discussion of the real estate market. I have the articles that will be in the information and description section. If you want to get the Fed's input on what has happened over the last 3 or 4 months, that May 2020 financial stability report that came out a month ago, really interesting. There's some interesting stuff in there. Also some lies that are hilarious. If you're a Patreon account contributor, one of my over 1,000, and read the article I wrote about what really happened in 2008-9 with the currency swaps and the Ron Paul one-time partial audit, the Fed, and the Freedom of Information Act request, the Fed is still sticking to their guns that only $600 billion in currency swaps was actually given out in 2008-9. It's just ridiculous. Meanwhile, I think they've gotten scrubbed from the internet, from search, most of the Ron Paul one-time partial audit of the Federal Reserve articles. Most of those articles have been scrubbed from search. It takes you a couple pages to go and find those things, if you can find them at all. I was talking about this last year. So most of those articles going into detail about the Fed audit, they've been scrubbed, and instead there's like a hardcore Democrat article in the first like couple suggestions on Google search saying that Ron Paul just made the whole thing up. I am not joking. There is an actual article saying that Ron Paul made the entire audit up. Meanwhile, Ron Paul has an enormous amount of integrity, and he saw all the audit documents. I've interviewed Ron Paul multiple times about this over the years for my YouTube channel in the archives. This is the media narrative spin and big technology censorship. So the gold price, let me just hit the refresh button. The gold price is up nicely. Might even be over 1,800 in the next week or two. That's how much it's rallying. Gold price popped. It's up $15, it looks like. Dollar index has rallied a little bit. This is still the tug of war, though, so it's going to go back and forth. Looks like for a short-term trend, dollar index is up. But again, tug of war. So it might go up a little bit more, and then it might get pulled back. It might go up, then pulled back. It's like a seesaw or a tug of war. Look, if you take one thing away, and I will cover this more in the article behind the paywall. If you do read the Fed's May 2020 financial stability report, you will see that this is unlike other experts, what they're claiming that the Fed has no clue about the global dollar shortage, about a dollar shortage or anything. You will see that they are well aware of dollar funding problems. You will see that they are well aware. There are experts out there claiming that the Fed has no clue, the Fed is not aware of this. If you read the May 2020 financial stability report, you will see that the Fed is well aware of this. And that actually, shockingly, hardly anyone is even using the global repo facility. Interesting. Okay, well, I want to thank everyone for listening. Thank you so much. This video, we're going to cross over 7 million YouTube views. It's been a long journey. Many, many years. Was very difficult initially to figure out how to get content, how to make the content right. I was not good at public speaking. I've gotten pretty good at this. I remember how hard it was for the first 100,000 views, and it was actually a lot easier. It was hard for me, but it was actually a lot easier back then to get 100,000 views on your YouTube channel. I got it. It took me years still, but I got it, I think, in 2014. I remember because I had a party, and there was a really pretty girl that showed up to see me there at the party. But it was a lot easier back then. Unfortunately, with the way YouTube stacks the deck now, it is, if you're trying to build your own YouTube channel to build up your content and start your own thing, it is really hard now to get to the first 100,000 views, unless you're a really pretty girl or you have lots of resources like George Gammon, and you can put out amazing videos with good editing and marketing. It's really hard to build a YouTube channel from scratch. Why do I only have 35,000 YouTube channel subscribers? YouTube censorship. YouTube censorship. I'm getting like 6,000 to 8,000 views per video. So I should be growing. My channel was growing last year at 2,000 new subscribers per month. And then YouTube just decided, this was around Repo Madness in September 2019. They just decided they weren't going to allow many more subscribers. So the subscriber count dropped. There was like 3 months, I think, where I added like 20 subscribers. So it went from 2,000 new subscribers per month growth in September 2000 for a lot of 2019, and then it dropped almost to zero. Alessandro says I should join LBRY. I've not that familiar with it, but if it's there's so many other options, but a lot of them are small. So bringing an audience there, I have friends who have over 100,000 YouTube channel subscribers, and they tried going to other platforms and they didn't make any money. So I spend a lot of time doing this. I have to make a living from it. Now, I don't make the YouTube channel doesn't pay my bills. The content behind the paywall and Patreon does. So I don't know I don't know exactly how many videos per week I'm going to be able to make. It depends on my health problems. And again, the content behind the paywall comes first. But I am trying to book more interviews. I may have David McElvaney on sometime at the end of this week coming up. I'm working on getting David McElvaney back. Oh, yes. Thanks for reminding me, Anthony. I appreciate it. Anthony says to smash that like button. Yes. So over 300 people are listening to this live stream show and only 100 likes. So please tap or smash the like button. I had a funny little zinger I was going to make about that. I can't remember that right now. It's too late. Oh, the other point I wanted to bring up, I forgot to bring this up 2 days ago on the full financialization with the central banks turning into hedge funds. The whole point of all that is the fiat money, the debt-based, digital debt-based fiat money, fiat currency, and credit system is a Ponzi scheme. So you have all these other central bankers that are all creating their currencies out of thin air, and they're all gambling like hedge funds, and they know if they screw things up in the derivatives market with over-leveraged derivatives trades, these other central banks, or these large hedge funds, they know that if things get systemic with their over-leveraged currency or over-leveraged bond trades, these large banks or hedge funds or central banks, they know the Fed will come to the rescue. No, the gyms in this area aren't open yet. Richard asked, do I think tech stocks will do well during stagflation? The big technology companies for now are doing well. A lot of capital is going into those. However, what worries me is what we're seeing in the news, how these big technology companies like your Twitters, your Googles, which has YouTube here, and Facebooks, they're doing editorial decisions. And the Trump administration is talking about enacting legislation where they could be sued for that. So if you're going to be an investor in one of those, you're going to have to... Okay, well, I think that's it. I don't see any super chats in the live stream here, in the comment section. I want to thank everyone for listening. Have a nice week.